Coming to our point of discussion, in today's class we are going to solve a problem on acquisition of business, and this is a problem taken from Jain and Narang, problem number 33. This is slightly a typical problem. We are given with a balance sheet and also the adjustments, and this problem is under the category of vendor debtor, vendor creditor. See, basically you are all well aware that vendor debtor and vendor creditor, in the sense debtor and creditor are taken over by another person, and they are responsible for collecting the debtor amount from debtors, paying the amount to the creditors. For that they are getting the commission. See, in this case the amount of a vendor debtor are taken over by another person, and also we are given with the full-fledged problem. First step, we have to calculate the purchase consideration. For that purchase consideration, we are given with the revised values for the assets taken over. Land and building is taken over with a less 10%, plant and machinery with a less 10%, furniture is also with less 10%, and anticipated goodwill is also given in the adjustment, so we are taking. Since the revisions for the fixed assets are given, so we have to calculate the purchase consideration based on asset basis, not the payment basis. Based on that asset basis, we are taking the we are calculating the purchase consideration, that is assets minus liabilities taken over. The loan creditor only we have to take it here, and another one, trade creditor, is adjusted against the vendor debtor. So first we have to calculate the purchase consideration, that comes to 36,800. Total assets taken over minus liability considered, 36,800. Then we have to take journal entries. So opening entries we should pass. You know very well. First, when we are opening the books of accounts, first entry is business purchase account debtor to vendor. Then we have taken that. Here the vendor is engineer, a person. So we can pass vendor, or straight away we can put the name of the vendor. Then another one is assets and liabilities taken over. For that we pass the entry. Third one, vendor debtor account debtor to vendor creditor and suspense. What the amount of a debtor accepted? 21,000. What the amount of a creditors accepted? 18,000. The difference between the debtor and the creditor, vendor debtor, vendor creditor, please mind it. Difference is 3,000. I put the asterisk mark in this entry. The reason is, you can pause the entry like this, the combined entry for vendor debtor and vendor creditor, or you can also pause the entry as first transferring the debtors to vendor debtor, transferring the creditor to vendor creditor. After that you can account the collections against vendor debtor and vendor creditor. Difference is, put it in the suspense account, whereas here I made the combined entry. Instead of that combined entry, you can also pass the entry like vendor debtor account debtor to debtor, creditors account debtor to vendor creditors. Like that also you can pass. Both the things are acceptable. Then fourth one is collection against the debtor. So already I told you what is the amount of vendor debtor, 21,000. So 21,000 of that 21,000, bank amount received is 20,000. So we have to take 1,000 rupees as vendor suspense. I wrongly mentioned that as vendor. It is vendor suspense. You please incorporate the correction. So bank account, what the amount received? 20,000. Vendor suspense is 1,000. Total amount of vendor debtor transferred to vendor debtor account is 21,000. Then next entry is creditors payment. See, mind it carefully. From debtors we are getting the amount, we are collecting the amount. For creditors, we have to pay the amount. So vendor creditor account debtor to vendor suspense to bank. Total amount of creditors transferred to vendor creditor, which is 18,000. On that, we are collecting the we are paying the amount only 17,000. So balance of 1,000 is taken in vendor suspense. What is the meaning for this? Total amount we have to pay 18,000, whereas we are paying is 17,000. So suspense account that comes to 1,000 rupees, it is credited. Then previous entry, vendor debtor, totally we have to pay 21,000, whereas vendor debtor we have to collect 21,000, whereas we paid 20,000, we collected 20,000. So debtor vendor suspense account is 1,000 rupees, it is a loss. So what the amount we have collected, it is less than the amount to be collected, is loss. Then last one, next entry is vendor account debtor to vendor suspense, that is engineer account debtor to vendor suspense, debtor to equity share capital. This is payment entry. How the vendor account is discharged. See, normally what we used to do after assets, the payment of purchase consideration. Here the payment of purchase consideration that we have calculated 36,800, and if you settle that vendor suspense, if you prepare the account for vendor suspense, debit credit, after settling those things, you will get the difference of 3,000. That also we have to pay, right? That we have to pay. So vendor 36,800, that is a purchase consideration. From vendor suspense, we are in a position to pay 3,000. So that 36 plus 3,000, 38,800 is discharged in the form of equity shares. Right? This is not given in the question, but we have to calculate, and it is mentioned as paid in the form of equity shares. That is specified in the question. So accordingly we pass the entry. Then next one, loan creditors. In the balance sheet, existing balance sheet, it is given as loan creditor. Two types of creditors we are having in this question. One is loan creditor and another one is trade creditor. Right? That trade creditor we have taken for adjustment of a debtor and a creditor. This is loan creditor. How to discharge this loan creditor? This is, we are given with the point that loan creditor is discharged by way of getting the preference shares. So for loan creditor we are giving the preference share. So accordingly we are taking a loan creditor account debtor to preference shares 30,000 rupees. Okay, preference share capital. Mind it carefully, business purchase is discharged in the form of equity share and loan creditor is discharged in the form of preference shares. Okay, so accordingly you will have to pass the entries like this.